to the dais. Please take a seat now. Yeah. Yes, for a minute. Please. A quick introduction about CA Mangala G Rao. She's a senior director at Lodha and Butt. Over 22 years of experience comprising of 15 years in audit and assurance and 7 years in finance controllership in various private sector companies. Her expertise mainly lies with statutory audits with substantial experience working with large national and international organizations across diverse industries, IFC and internal audits. And she has also handled ICFR assignments, worked across the industries such as manufacturing and trading, IT-enabled services, healthcare, VC and VC fund management companies. Ma'am, it's a pleasure to have you here. Thank you for being with us, ma'am. Over to you.
Am I audible? Okay, as I connect my system to get my PPT up and running, I have a request. I think we are pretty scattered, just like the profession at times is. So if I could request, and this is just recommendatory, not mandatory, if any of you want to come towards the front and grace the seats that are looking very empty, I'll be very glad. Thank you. So interesting topic that I have on hand. Yeah, no names basis in that sense, but will you help me by letting me know, irrespective of whether you're in practice or you're from the industry. So if you're from the industry, let's say a company that you were in either before or after you joined, no fault of yours, of course, was picked up for fraud in the auditor's reporting. And if you are in practice, then it need not be something you picked up. Your firm could have picked it up. I hope I'm not wrong in asking this question. I just want to know how many of us may have been involved, either from the management side, not that you were involved in the fraud, but yeah, where you were at the receiving end partly, and as an auditor, where you had to report fraud, or you were even considering it. You may not have had to report in the end. So can I have a show of hands, please? How many people? Okay, I think a few people are also scared to put up their hands, as most of us would be. Okay. So I have a few young friends who keep asking me, what do you do for such long hours in office, right? I'm sure many of you have family who ask that question too, friends who have that question too for you. So why that question? So I said, work keeps me busy. So they said, what great work do you do? What are you into? I said, it's called audit. So they said, oh, that, it is so simple. I said, is that so? So they said, yeah, we know what it means. I said, can you tell me what it means? Yeah, it's a full form for something. Sorry, it's a short form for something. So I said, oh, is it so? All these years when I learned audit, I was never taught that audit is a short form for something. Can you tell me what it is? Anyone with the answer? Anyone here who's heard this? Because that made me sit up and wonder what work I do. I think Kavita knows, but I had requested her not to share it, so she's quiet. But if there's nobody else, then she can let the cat out of the bag. You have something to say? Yeah. So I was told, such a simple job you have. AUDIT, all you do is tick. Okay. So, and that made me sit up. Is that all we do, really? And if that is all we do, then how are we going to look at, worrying issues? How are we going to make it clear to the management that something is acceptable and something is not? Set me thinking. Now, the topic that was given, a very interesting topic. Auditor's responsibility, fraud consideration versus fraud identification. It's up there. So how many of you think that it's only a consideration, and how many think it's an identification? How many for fraud consideration? Okay, it's a little confusing, isn't it? Even when I saw the topic, I was wondering. Okay, so do I therefore take that everybody else is for identification? Let me figure out, because maybe there's a third crowd also. So how many for fraud identification being an auditor's responsibility? None. Okay. Yeah? You do believe? Okay. Can anyone who says that auditor's responsibility is fraud identification give me some insight into why they believe it is so? For Caro. Okay, for the reporting purpose. Okay. What else? Anything else? Because I thought everybody believed it is consideration. So why is it only consideration? Anyone in support of consideration, would you be willing to add a few words from your side? How many said consideration? Only one now. Okay. Yes, why do you believe? Can we have the mic, please, if he needs one? Meanwhile, anybody else who believes fraud consideration is an auditor's responsibility, please put your thoughts together, because I will need to move on, but I would just love to hear what you all have to say.
Yeah.
It was consideration when the new Caro came in, that's Caro 2020, it became identification. Is it? Okay, that's one answer, fine.
Okay, but as a user, why I say it is a fraud consideration is because from the management side, we know the complexity of operations, right? And the difficulty of identifying fraud. It is like for looking for a needle in a haystack. And with the resources that are already available to management, even then it is difficult. Yeah.
Even then?
Even then it is difficult for the management to identify frauds or proactively prevent fraud, okay, or even identify frauds. And to expect that from an auditor who has a bit of limited resources and limited time is an unfair expectation. But when we say why we expect fraud consideration is, okay, you are going to perform some procedure, so have that fraud consideration in mind. And yeah, it could be that you are able to pick up something which the management is missing, so which is then a big value add. But otherwise, yeah, if you don't have those fraud considerations, then yeah, basically, yeah, the audit will miss something big, right? So that is the only, from a user, that's why we say
So that's
public
why
fraud
you
consideration.
said fraud consideration. Okay, anyone else, please, before we move on? None? Okay. So here it goes, just my take on it. Let's say you're considering a vacation. That sounds interesting in December. Not really, because we all have CPRs to collect. Okay, but let's say you're considering a vacation. Will you then identify the places that you want to visit? Okay. Is it possible that you identify a place that you want to visit and then consider a vacation? Can happen too, right? But it's more often that we first consider going for a vacation and then we end up identifying a few spots. My take to this is that unless we have the fraud consideration happening, there is very little scope to really identify fraud. So that brings me to the next question. What is the objective of audit? Anyone, please? Anyone? So many august people in the audience. I'm so happy to be here with, I know it's a smaller number that was there than what was there a while ago, but a professional is a professional, and my colleagues are all here. I'm so happy. So I'd love to hear from you. What is the objective of an audit as you see it? Anyone? Anyone? Anyone at all? Based on what you do. How many here in audit? It would be good to know. Oh, quite a few. Okay. So can we have someone in audit tell us what in your opinion is the objective of an audit? So the reason these questions is that fraud, the word sounds heavy, doesn't it? I even shudder saying the word many a times. Even to go and tell our clients, I have 5 observations is worrying. Then how will I go and tell them I've identified fraud? Isn't that too large? Okay, so back to the question, what is the objective of an audit? Even a textbook answer will do fine. Sure. Expression of the true and fair view or a true and fair opinion. That's pretty much what I said. So I was speaking with a few senior colleagues, and I said, I was asked this question, and I said, yeah, the idea is to present a true and fair opinion. So one of the seniors stands up and says, you're wrong. And I was shocked. I said, I have many years in audit. Is the basic premise wrong? So what I heard was, true, that's what we're looking to report perhaps, but what was said is something that we don't really look at that way, but we actually do it. It's not that we are lacking in our audits. What do? We first understand what this company is all about. We do a little bit of understanding of the business entity and the environment as is required. We then go on to see what kind of risks could be there, what kind of pressures they may be under. Why would they say overstate or understate sales or expenses or whatever it be. And then we design some tests to try and address those risks. And then we frame an opinion. Am I right so far? Is that what most of us do? Or at least that's what we're supposed to do. But what happens most of the time is that we have this format, right? So we've also learned from a lot of people that what many of us do, and it's wrong, really speaking, is that we just copy-paste from last year's audit opinion. So most of the times, we are seeing that the true and fair opinion is already there in my mind, right? I've not even thought through that, oh, this year it may not be a true and fair opinion. I have not even considered it. Forget identifying it. I have not even considered that there could be a problem. Okay. So we'll go on to the favorite standard that talks about what the auditor's responsibilities are with regard to the identification of fraud in financial statements. And what are the objectives we just spoke about? So I'll move. So there we go. How many of us actually read the auditing standards is not a question I'm going to ask. Because as Sundareshan sir rightly said some time back, many of us have spent nights reading the accounting standards because we don't know how to interpret a certain issue. But most of us would not have spent that little time required to go back to an auditing standard and see what does it say. So if I had an issue in sampling, what should I do? Because no accounting standard may tell me that, but an auditing standard will definitely tell me that. Have I done all my analytical procedures right? Did I do all that was required, or did I leave it somewhere halfway? Did I do it only on the first set of financials, or were there 100 other entries that were posted along the way? Did I do that again at the end? This is something that we don't even think of. And why I'm saying we is because we as a fraternity have certain pitfalls that we need to, come out of if we were to stand straight and be able to face any kind of investigation, any kind of review, any kind of, if we had to face the NAFRA, as far as we've done all that we should, like sir said, it's about, I could have made an error in my judgment, but I should not be caught for gross negligence, right? So if we go back and read the standards on auditing, and SA 240 particularly, so it goes back to saying, how do you apply SA 315 and 330, both are up on the screen, because many a times I can easily remember the accounting standards and the Ind AS. What is Ind AS 19? What is Ind AS 115? This comes back easily to us. What is SA1? What is AS1? What is AS2? Comes back very easily to us. But when we say SA 315, SA 240, SA 330, so many of us are actually searching in Google, okay, what does it really mean? That's the reason I thought we should all familiarize ourselves a little more if we are to have the fraud consideration in mind. So it says, specifically look at these two standards with the idea of addressing the risks of material misstatements, all of them, but particularly those that you think could be due to fraud. This is simple stuff for all of us in practice or those in industry. We've seen all of the fraud risk factors. Again, this makes us stop and think. So how many times do we really think of what could be the incentive or pressure on the management or on somebody within the company other than the management to want to commit fraud? I would think this is something that comes reasonably to many of us. We would look at, okay, what are they trying to achieve? Maybe they have an IPO coming up, so would they try to blow up numbers? Maybe they have an investment coming in, so would they try to increase or overstate revenues or understate expenses? All of this comes very easily to us. But when you look at things like rationalizations and attitudes, now that is very tough for us to even think through. So when somebody says, oh, there is an opportunity here, the controls are weak, I can easily get away with what I do. Now, this is not something that we openly discuss either with management or with those charged with governance. So I'll share a very interesting thing that happened. Most of us, like I said, are so worried to use the word fraud with the management. What I realized when we were doing a portion of the work in India for an entity it's a private firm outside, a private company outside, it's not even a listed entity outside of India. But the lead auditor or the lead client service partner who came in from the US, he mentioned to the management and the directors and those charged with governance that he wants to meet them. He'd in fact set up that meeting even before he landed from the US. He said, I need 1 hour with you. And we were lucky to be a part of it. His questions were partly disguised, but partly very straight. He said, have you had any instance of fraud in the year that we are looking at, in the prior year, in any of the prior years? And if their answer was yes to something, because most companies would say there was some element of one little fraud committed by an employee. It may have been small amounts of cash. It may have been inventories that went missing. So most companies would say, that was small, we just filed with the insurance company and it's all done. He was very specific to go and ask them the further questions. Is that employee still here? Who is the employee? What role does he have? Have you now changed his responsibilities? So many interesting questions which I thought would occur to us, but we would hesitate to ask. So I think this is also a part of fraud consideration. If fraud is not even a consideration in the mind, how are we going to identify it? Then of course there's the misappropriation of assets also being there, which, so there's this lovely thing called management override of controls. So many auditors here, any 1 or 2 thoughts on how we test management override of controls? Tough topic, right? How many believe management override of controls is really hard to test? 1. You're thinking. So everybody believes it's very easy to check on management override of controls. Any thoughts? Okay. How many here speak Kannada or understand it? Okay, very few. Okay. I don't know if I can use Hindi. What is that? Ulta chor kotwal ko date is one way of saying it. Or for the Kannada speakers, an easier one that I thought of was Beli ne yeddu hul meitante, correct? Which means the fence that you have around your crops is falling all over the crops and destroying them. So management override of controls is that difficult because the fence's job was to take care of your crops from the animals. But if management or a senior employee or worse still, all of those charged with governance or some of those were to be involved in fraud, how difficult would it get to pick up is something that has to be seen when you really experience it. Most of us would not even want to think that way. There was an interesting point a short while ago that here are the people who appoint me. Now, how do I go and tell them what they're doing is wrong? So in the same way, how do I go and accuse someone that I think your company is either undergoing fraud, and I think A, B, and C are responsible for that fraud? Don't you think that's really tough? Yes, no? Tell whom? I understand, I understand. I am very much with you, because it gets really tough to tell someone that you know well on their face that what you're doing is wrong. Or, I won't even put it that, because many a times we are not even sure. It may not be that we've really identified it. There is a consideration. There are a few things maybe in your analytical procedures, or let's say in some of the samples that you took, you did not get adequate supportings. Large revenue build at the end of the quarter, but you could not get supportings to show that the client has really received and accepted them. The client is taking a lot of, the customer of the client has received them. The client is taking very long to give us those supportings. Now that's also funny, because these days you have a simple e-way bill that shows the goods really went out. You have proof on the other side to say it was really received. When you send out a confirmation request, the client is supposed to, the customer of the client is supposed to get back and tell us whether or not he believes that is payable to our client. So it is actually that much easier as times have gone past, and yet it is so difficult to say, even if we have ended up identifying something which seems out of the regular or normal transactions, to be able to go stand up and tell the management that, hey, I think this is a fraud consideration. We may need to work together to identify if there's really been a fraud. Is that correct? Would you think that's so tough to just brace the topic with them? So at that point in time, you're not sure if all of the management or all of those charged with governance are involved, right? So what could happen, I take your point completely, what could happen is that they would just try to say, oh no, that's nothing, there's nothing to worry, I'll get you all that you want, I'll get you a confirmation tomorrow, and so we go on with it. But then comes the signing date, which is tomorrow, okay? Or let's say it's the audit committee or the board meeting, whatever that is that you have to attend, which is tomorrow. And as of today, you still don't have that confirmation. You still don't, they haven't yet paid for those products. You have still not been able to get adequate proof that those goods have been delivered. And unfortunately, in your inventory count, those goods were missing because they had been dispatched, right? According to the client. So then how do you go back and explain this? Or would you just say, okay, fine, I've done other tests. Most often, the team comes back and tells me, so I ask them, what did you check? So what you would find is, I checked the invoice. I checked if the GST return was filed. It obviously will be. So how did you check it was really delivered to the customer? How have you established he has accepted it if he is not even giving a confirmation that he owes that money? If not on 31st of March, for example, at least if he says, yeah, I received the goods on 31st of March, I could not check them, so I had a quality control time needed, so I needed 3-4 days to go through it. But yes, I accept that I have received these subsequently, because when you send the details, you also request them when it doesn't match to give a reconciliation. Or we ask our clients, could you get an account statement from them and do a reconciliation? Now, if none of this happens, wouldn't you want to discuss this with the audit committee or the board? I'm talking about it being very material. And what more can I add? What if it's a related party transaction? They may or may not confirm it. Because on the other side, there could be other independent people also who would not want to confirm it, because they don't believe they received those goods within 31st March to accept it. Or they may just not want to reply. We face a lot of that too, right? So how would then we handle it? would we not speak to the board about it at all? Would we make a presentation which says, I have got this material number which doesn't seem to have got delivered, or there is some gray area around it? I'm unable to fathom if the customer has accepted these goods or not. Especially, this becomes more difficult when the signing dates are very close. Because they're not even, they have a credit period of say 60 days, and we are just about 30 days past. So we don't even have adequate information to say, okay, they were happy with the goods and they paid for them. So then what do we do? Any thoughts? Would we present it to the board? Okay. Mm-hmm. Any other thoughts? Okay. So yeah, I think that's how most of us would handle it. We would put it across to the finance controller, CFO, whoever's involved. We would say that since I haven't received these, I think your management needs to be aware of this. This will take care of one thing. If something is happening at the lower levels, it will ensure that they are either better prepared to argue with us the next day in the committee or the board, or it will ensure that they immediately take a step back and say, okay, so I've had those cases where people say, okay, what do you want? Do you want me to reverse it? The problem is when it is very, very material and large, because many of those numbers would have already gone to the board. If it is small, they normally agree. Small in terms of it may be beyond our materiality, but as a client, as a company, for them, it may not be very significant, or they can live with that difference. So they normally say, okay, that's fine. Because if they're looking at their bottom line, and let's say the margin is thin, then reversing the sale also mean we reverse the costs. So they don't really mind it. So these could also be cases where we would have already ensured that it doesn't need to go into another round of discussion. Yes, please. It should be minuted also. It should be. So, just a second. Would you want to give him a, because I think there are people, that was actually the reason I wanted more people to come on, and sit closer, but I think we can give him a mic, please. Okay, so here I would like to say that if this is something that is material to the audit, as per the materiality that we have fixed, right? So would you want to go ahead and sign if the board were to say, no, it's all okay, and I can get you a confirmation, but it would take 5 more days, but you have to sign the financials today? Sure. Yeah, so it's a good question, and I think, no, I will come to that. So when we see that something is not acceptable, it could have two or multiple responses from the auditor to it. One could be that, no, I'm not satisfied, this is very material. I could delay the signing of the accounts if you promise me that you're able to get me all the supportings in the next 5 days. This could be one thing. Your question is on how do we minute or record it, right? So one of the things that so I'm coming a little one step before that. So the thing to ensure is that when, so many a times we have companies which may not necessarily have just 2 directors. There may be multiple directors. There would also be independent directors and some more directors from, say, the parent, or various people representing various entities on that board. So one of the things that we found useful, and many auditors are actually doing this now, is to put down either the agenda for the points that we propose to discuss in that meeting, or if time permits, even prepare a good presentation and send it across to the entire board, which means you need to have all their email IDs. This takes me back to one more step. So in one of the cases that we had, where it wasn't even a fraud consideration or an issue, we just wanted to tell them that this is something that we did not go with. We have insisted that either the revenue be reversed. It wasn't a fraud consideration. It was just normal cutoff issues. We said either you reverse revenue, or let's discuss it at the board. If we are still not satisfied, we will qualify, because it is material for us. Now, that is not either an easy or a pretty discussion, right? But it is important for the board or those charged with governance to also know that there was some consideration, if not be a fraud, but some consideration that was not comfortable to the auditor. I think this is very important. Most of us fail to do it. So what is done is either list out the agenda or make a formal PPT and just mail it across to everyone in the board. Now, at that time we realized there are times we don't even have their email IDs, so we go searching for it. So, the people we deal with daily, day in and day out, we have it, but for the others, we don't. Then we said, how are we saying, understand the business and the directors and the entity and the environment when we are not having, I'm not talking about finding it in public domain, it is easily available. It's not on my file, why not? It should be there. I should know the credentials of the people that are at the helm of affairs of a company that I'm auditing. Why should I not know it? I should. So this meant that we did some soul searching, found the email IDs, and told the people whom we were dealing with that, look, we are going to send a mail out with this matter today. They hurried up to get a lot of those people on a call at 10 p.m. so that we could speak to them and iron it out, because they did not want this mail going out to the independent directors. Right? Now, I was personally involved, so I can speak about it on a no-names basis, but it was worrying. We said, why are they trying to curtail what we want to say? We said, okay, so do you accept? They said, no. We said, we qualify. They said, but these numbers have gone everywhere. I said, the audited numbers haven't gone anywhere. Those are yet to be released. And that is the auditor's prerogative to decide whether those numbers should go out. Of course, fair point on something that was discussed even a little earlier. We did stop to think, what would it mean? Would it mean, a loss of a client? Would it mean a loss of face? What was important there was the fact that funds have already invested in that company. If they are not looking at it today, they will look at those financials tomorrow, even if they're busy. And when, in a due diligence, some of these things are going to be picked up, there will be a loss of face. And when we have that loss of face with some of those funds, that is the biggest loss of opportunity that I will have for the future. So we said, one is, sometimes we need to do the right things, isn't it? So we just picked up a few of those things. We looked at the various standards on auditing. We said, okay, what is our job? Did we do our sampling right? Did we do our analytical procedures right? Did we do the cutoff testing right? Once the answers were yes, we stood up to say, okay, this is what we are going to do. There was an emergency call at 10 p.m. in the night, with all of us having to be on the call, discuss the points. Yes, we chose to disagree, so there was a qualification, but at least now they were all open to it. They understood our perspective. The issue was that the people who had to explain it to the board were not even explaining it. Reason is simple. They would not want to go and tell the board that this is what the auditor found, because the first question to them would be, if the auditor could find it, why couldn't you? Right? So I think, yes, completely taken from all of you here, that it could be very dicey to go and talk about even observations. That's what I said in the beginning. To even speak about observations with our clients gets difficult. Then what do we say about fraud? So I'll move on with the fraud topic if that's okay, and if there is no other points to discuss on this matter. So also speaking about complex and unusual transactions, there aren't very many in the clients, but at times something pops up. And I think it is, what we found was that if there was a complex or unusual transaction, then that should have been discussed in the initial meetings between the client and the auditors. If it has skipped attention, and if it is very unusual or large, that itself is a worrying factor. If it was so material to their financials, they should have apprised us about it earlier. They should have said, look, this unusual transaction that is coming up. So will you guide us on, is this the right way to do it? Can I do this accounting? So on and so forth, right? But many a times that does not happen. That itself is a cause to be concerned. When we talk about management override of controls, can someone be kind and tell me which are the kind of risks that could have a more higher relatability to fraud than other regular risks? Any thoughts? Anything on the likes of management estimates? Could be impairment. Could be impairment of anything. Impairment of receivables, impairment of investments, impairment of intangible assets, impairment of long-term investments, all of those. And how about going concern issues? How many of us have looked at going concern issue as one of the start points of an audit? I won't ask this as a question, because I know that show of hands gets a little difficult. So let me do the show of hand myself, okay? So there are cases when in September you're running against time, you have to finish the audit. So, and the client has conveniently sent certain data only on 20th. With the request that no extension can be sought, we will need to complete this by 30th. It is a good request, and we are willing to put our minds to it, but somewhere in that time frame and in the running behind that, we at times miss to see that there have been heavy losses. Until last year, the net worth was not eroded, but this year, with the numbers being what they are, the net worth is eroded. And we realize this only at the end when we are looking at some of the numbers, and then there's the whole going concern issue that comes up, and so much that we have to test and do. Okay. So now with all this said, any changes to the thought on fraud consideration or fraud identification? Yeah, yes, please. Why? Yes, please.
So, madam, regarding this going concern concept, just some companies they will have losses. Last year also
Could you
losses.
hold up the mic a little more, please? Yeah.
Some companies will have losses. Earlier year also they will have losses. This year also they will have losses. They might have got some investment and they have done, again there is losses. Okay, but they will be saying that, okay, in some earlier auditors they have said that, okay, management or these shareholders having full support, and management is of the view that, okay, there will be no going concern issue is there, and they will have support of shareholders and management. So then in this case, how will handle and how will identify that there is actual going concern issue is there?
Okay, did you say that they just represented to you that everything is okay and they will be able to run the business? Or
Yes.
are there numbers that show that they have got fresh investment? There are numbers that show what their next year's projected financial statements or numbers look like?
Numbers they have not shown, but they are saying they have got the letter.
Sorry, they
Something
have
is-
got a?
Like they will have some holding company.
Okay, you mean a
Then-
letter of support?
Yeah, letter of support they will give.
Okay.
But holding company itself is having no profit. They will be also in loss. So how we'll address this issue?
So
this kind
then
of issue?
that is a consideration, right? So,
Yeah.
and then you're required to identify the issue. So what we would do is normally, I mean, that's how I think most people handle it. It was a very valid point when you said, you know, the letter of support has been given. Now, unfortunately, many a times, the holding company is also not in public domain. So you and I have no way to check if their numbers are good. They are not yet been audited. They are waiting for their subsidiaries results, which you and me have to sign off today, tomorrow, okay? And therefore, you have no access to their books also. But luckily, you said that you were able to find out that the holding company itself did not have profits, or they don't have a further way to traverse their path. So we had an interesting case like this, where we asked the management, can you get us a letter of support? When they went back to the parent, so the parent said, in fact, right now, we are not allowed to give a letter of support because although our results are not yet out, that is not yet audited, we do not have the funds to run for more than 3 months. But things are in the offing. There are more funds coming in. However, that is going to happen only on, it was 5 days later than what we had to actually have the board meeting and sign off the subsidiary financials. We were very clear. We said, we have studied the subsidiary enough to know what their trajectory for the next 1 or 2 years could be, because by that time they had new lines of revenue, which were also doing well. So we said, we know what they are able to do, but we cannot take a letter of support from a company which itself has openly said that, so we were asked, they said, we can give you a letter of support, but this is in fact the reality. We said, but then if somebody were to ask you for the subsidiary financials, which were signed earlier, which refer to the letter of support given by you, which is even before you have your adequate support to stand straight, then how do you expect that it will fly with those charged with governance? And what will the regulators say if at all they happen to pick it up? The chance was remote. However, this is what we told them. And believe me, I think even Sundareshan sir was saying that a lot of times, not only about the fees, about anything else, if we go with our homework and our points ready, many a times management is forced to accept what we say. So when we said that, look, this does not fly, if you want, we can delay the signatures by 5 days. You have a board meeting again. You take on record the letter of support, which at that time the holding company is eligible to give. Give it to us. We will take it on record. We will do the subsequent testing for those 5 days also, which we didn't anticipate much trouble with. But we would have therefore got to know what funds the holding company got by that time to be able to give us the letter of support, because they had promised to share it with us. Luckily, things were a little out in the open. And this also meant, fortunately or unfortunately, we were not the parent company's auditors. Therefore, we had zero access to their books. It just happened that because the parent company's auditor reached out to us for the procedures that are required, we checked with them saying, would you be comfortable, because we are not comfortable taking that letter of support on the earlier date. They immediately said, no way, we cannot accept if you were to sign like that. We said, great, that's what we intended to also do. And we went back to them, the dates were moved. Of course, the parent company's dates couldn't be moved, so they had to take a shorter time between the subsidiaries' adoption of financials and the parents' adoption of financials. But luckily, they were open to it. So one lesson we learned from there was to request our clients, if possible, that don't keep your board meeting on the same date or just the very previous date if possible from your parents' adoption of financials, because there could be some matters that we would need to discuss and thrash out before we gave our report. So if you keep a thin, at least a 2-3 day window, we all have time to discuss, decide, and close. So I hope that sort of answers your
Okay, that is also there, but the thing is, when the letter of support is signed by the director, who is also a director in the subsidiary company, and he is also a director in holding company.
We have honestly not accepted. We have said we can't have a director of the subsidiary company signing off on behalf of the holding company for this purpose, at least.
Because
So we have not accepted.
that director is director in holding company also.
Okay.
As
But
well
he
as
would
in
not be the only director, right?
Yeah, other director is also there.
Yeah.
Yes.
And at times, if required, you may also ask for the resolution of that company
Correct.
that entitled him to sign that letter of support,
Yes.
just in case he's the only one available to sign that day or something to that effect.
Correct.
Very rare these days because you have DSCs and people can sign from anywhere. But even in case that came up, then you ask for the resolution of that company which said they've taken that letter of support on record. So then you know who's entitled to sign it. If that same director is entitled by any chance to sign it, then it may be acceptable, not otherwise. Okay. So there was something interesting that Rajesh was picking up on. I did not mention it specifically in the slide, but I will definitely touch upon it. So if there is a fraud consideration, and therefore, we pick up the right risks of, we have picked up the right risks of material misstatements which could have occurred due to fraud. We have designed our procedures correctly. We've also gone through all of this. Now, what happens when you do identify something that looks uncomfortable and could be directing or pointing a finger towards some possible fraud? Because as rightly said, to identify and conclude, we may not be the right people. A lot of times there could be a forensic auditor that may have to come in and check a lot more stuff before this is concluded. So then we may not be the right people to conclude if indeed it was fraud. So in that case, what happens next? If that fraudulent, can I say proposed, or alleged, if I may use those words. So if I find that number to be very large, let's say a couple of crores, what options as an auditor would I have is something very interesting about the 143.12, the ADT4 reporting, much of which many of us may be very worried to tread upon. We have, like I said, fraud is a very scary word. Okay? But fraud is a word that is very commonly used today. How many of us have never seen an ad about how somebody is defrauding someone? I think there'll be nobody who can lift their hand and say, I've not heard of a case of fraud recently, or I've never heard of the word fraud. Not possible, because it is rampant. With changes in the ecosystem, there is a lot of problem. There are a lot of changes at the helm of affairs and at various levels in organizations, which sometimes makes it difficult. For example, one of the basic checks that was being done as in the part of the internal financial controls of a large company was that how many times do they have the background verification of the person done for certain key roles? The answer was interesting. Many a times, the person has already joined. It's been 1 month after that. He's already been, inducted into the company. And then they find out there was some history that is not very clean. Now, for them to go back and do anything at that point in time, they find it difficult. But companies do stand up to the challenge. They have to sometimes go that tough route of, picking it up so that tomorrow they don't have to answer us as auditors about our fraud considerations and likely identification of fraud. So these challenges that we find all through, I think is something that all of us should address in the beginning of the audit, through the audit, and up to the conclusion. Because even in subsequent events, there are times when certain fraud risks that you may not have found that existed during the audit period, but they may suddenly raise an ugly head post the audit period. So that is the reason for our subsequent events reviews, and those are the reasons why, there are so many standards on auditing that require us to do all of this. So while this is a topic that can go on for long, I have already given you my take on it. Happy to discuss offline also, but I think what this means is definitely for the auditor, the auditor's responsibility is fraud consideration. However, if we did not identify, the likely or the chances of fraud that may have come up when we have done all our tests, then it is okay to document and conclude that this is how we addressed all our fraud risks and there is no concern beyond that. But if we have not even identified the risks, then like sir said, we would be alleged of gross negligence, which is what we will have to then face the music for. In fact, just last month, I was at a forum where Mr. Ajay Bhushan Pandey, the chairman of NAFRA, was present, and his take was that, back in the day, when he said back in the day, say 30, 40 years ago, people did not invest so much in the market. Today, every other person has a demat account, everybody is investing. All of those companies, there are auditors. Each of those auditors are therefore responsible to ensure that although yes, as auditors we are supposed to be independent, we are, and we don't take shares in those companies. We may be heavily invested in some other company. Just imagine if a co-auditor, a colleague in the profession, did not pick up a fraud, and because of that we lost some money. How would we feel? So I think it's obvious that for the sake of the fraternity, we will have to take this as our responsibility of fraud consideration. And then in case we did identify something, while we all wish we didn't, but if we did identify something, it would be important to bring it to those charged with governance. Where it is more serious, we would also have to report it to the regulators. I think with that, I will take a stop. Thank you so much for being patient and also for being very interactive. Thank you so much.
We will do it. We'll do a follow-up session for sure. This is on a panel discussion on, is India headed